Money Wise on 938 Live.
A very good evening. This is Money Wise on 938 Live, the first edition of the Dragon Year. So what better way to usher in the new year right here on Money Wise than to bring in Dennis Ng. We used to introduce him as, housing founder of housingloan.sg, the author of Master Your Finance. Now he's another best-selling author, another title. He's the best-selling author of the number 3 book on the Singapore bestseller list. And it's, of course, what your school never taught you about money.
Yeah, that's right.
Welcome, Dennis, and thanks for coming in this evening.
Yeah, good evening.
So, Dennis, it must be really nice. Number 3 on the bestseller list. Last week it was number 2, I believe.
Yeah, last week was number 2.
And this week is number 3. Dropped a point, but maybe next week it'll be up again. So, without further ado, of course, you know our number, 669-11938. Let's kick off the show with Dennis casting his crystal ball into the Dragon Year. Dragon Year, Dennis, does it mean abundance and wealth for investments?
I think
if we put our faith in astrological signs.
I think you asked the wrong person. I'm not a fortune teller.
Okay.
Yeah, so I think maybe we don't look so far ahead first.
Okay.
First, we look at probably a shorter time frame within the next, say, 1 to 2 months. Then we stretch our, horizon to probably longer.
All right.
To 2012 and even 2013.
Okay, as it stands right now, Europe still has to sort itself out. We keep saying that the US is seeing a minor uptick in their economic performance, but it's still rather sluggish.
Yeah.
We still have a little bit of uncertainty right here in Asia as well. So, Dennis, what does all this mean? If you could put it in perspective for us.
Well, okay, so maybe we look at the stock market first, because I think that's something a lot of listeners are very interested in. So
they only want to know about the stock market, Dennis.
So let's get this over and done with. Then we talk about the longer term picture, the fundamentals.
Hold that thought. I know we have a caller on the line. Let us take his question and then we will continue. Good evening.
Hello.
Hi. Yes. May I have your name, please?
I'm Sen here.
Sen, you have a question for Dennis?
Yes, I had for Dennis.
Yes, sir.
I just asked him about this stock market in the recent week. 90% of the news you heard are all negative.
Okay.
But it appears that there's a bull run in the last three weeks. How is that happening?
Okay.
We cannot understand.
Okay, well, that's a great question. Dennis was just about to talk about the stock market. I'm sure he can answer your question with his answer. So, Dennis, the stock market. Let's put it out the way, as they put it out there.
Yeah, sure. So, actually, last few months, what actually happened is that there was actually, a run from risk assets, which includes stocks, commodities, and so forth. There was a sell-off, the risk assets, stocks, commodities, because of the uncertainty in the Europe. And now there is a temporary lull in the Europe side. There are no huge troubles coming out. And in actual fact, in the last 2 months, what happened to Europe was the European Central Bank has been quietly pumping money into the euro. And to give you some figures, Italian banks in November actually borrow $150 billion from euros from the ECB, and in December they borrowed 210 billion. So what happened? You saw that the Italian 10-year bond yield has actually dropped from 7% to about 6%. You may think that is very good news, but mind you, that is after pumping in $300 billion, and they only managed to lower the yield by about 1%. So what happened is, because Italy now is like not in imminent trouble, so the situation in Europe start to clear a bit, and as a result, what happened was there was a reversal of money. Money start selling off from bonds and so forth, and they actually went into to buy stocks and commodities. So what you actually saw in the last 1-2 months is gold prices have recovered from below 1,600 US to now above 1,700. Silver has recovered from about $27, $28 to now about 33 US. And the US stock market actually is the strongest one in the whole world currently. It is the only market that has, for the Dow Industrial Index, is the only market that has been a golden cross. What do we mean is that the 50-day moving average has crossed above the 200 days moving average. And why is this significant? Because based on historical analysis, whenever this happens, whenever the golden cross happens, typically the 3 to 6 months after that, the stock market is up. And on average, this is accurate for 81% of the time. So you must bear in mind that no technical analysis indicator is 100% accurate. So 81% accuracy is very high accuracy for any technical analysis indicator. So what is likely to happen is, as long as Dow doesn't drop too much, if it stays above 12,300, 400 levels, it stays within the range, what's likely to happen in the next probably 1 to 2 months is Asia will do a catching up. So Hong Kong, China, Singapore stock markets is likely to catch up because US has gone up a lot and the fund manager is now saying that, hey, there's not much money left from the US market, so let's probably move some money to Asia. So probably in the next 1 to 2 months, actually the market sentiment is looking good for stock market.
I hope that answers your question, sir. Do you have a follow-up question?
Yes. I see. So it's actually a matter of liquidity in the market, plus
Yeah.
with ultra low interest for the next 3 years or so. And instead of putting money into the bank, people are just coming up. Fund managers are coming up too. And also there's a possibility of QE3
Yes, that's right.
in April. So actually that has helped to boost the confidence of the investors.
Actually, before they even launch the QE3, the markets would typically go up because the markets always like to buy on rumors, sell on news. So naturally, when the QE3 actually happened, what you might see that the market might not move up much.
So, Dennis, about the stock market, first month, second month into the year, it looks good, but if we are really looking for another quantitative easing by Western governments, would that mean that, it'll depress interest rates further? I don't know how much further it can go. I don't know if it is a minus sign on interest rates.
I think interest rate can't really go much lower. The 10-year bonds yield for US government bond is about 2%. It's almost as low as it can go. The 30-year US government bond is about 3%. In actual fact, the 30-year bond yield might actually go slightly higher up because like I mentioned, there might be some movement of selling of bonds to move into risk assets such as stocks, commodities, and so forth, because of this, anticipation of the quantitative easing.
Yeah, we'll talk about hot money flows in just a moment, but I believe we have a caller waiting online. Good evening. Who is on the line, please?
Hello, I'm Mr. Ho here.
Mr. Ho, a question for Dennis.
Hi, Dennis. I'm just very curious to know how you get or how and when you get the information. Like the Italians had borrowed so much money from the ECB, and by the time we common people we know about it, the war is over and all.
Mr. Ho, I think you should be attending one of Dennis's seminars. But anyhow, I'll put that there. Dennis, where do you get your information?
No, I get my information through all public sources, the news sources, the Reuters, your Bloomberg, and so forth. Really, I don't have any information that you do not have. So like I mentioned to you, what is likely to happen is US seems to be the leading market. So actually, the show is not over. There is still chance because you can see Hang Seng is actually seems to be bottoming. So Hang Seng might move up from now about 20,000 level to 22,000 to 24,000 level. So there's still money making opportunities if US continues to stay strong, and STI as well. STI might easily hit 2009 above, and if it goes above 3001, then there might be actually a new uptrend. For Shanghai, it may go up from here to about 2005, 2006. So there is some room, but of course every time a real investor will always set a cut loss level. That means if things do not turn out the way we envisage, we are ready to say that, oh, so sorry, I'm wrong, I admit I'm wrong, and I cut loss and I cut my losses, and that's it. We won't be like, oh, no, it has to go up, yeah.
Defying the fact. So the emotional level, you must have that sort of emotional detachment from the market.
Impossible to be emotionally detached. What we need to have is emotional stability. That means when the market move up, I make money, I'm also not too excited. When I lose money, I'm also not too depressed. We need to have this emotional stability.
Mr. Ho, do you have another question, please?
Yeah, Dennis, you mentioned that you listen to Reuters, Bloomberg, and I also listen to all this information, but I feel that whenever this news comes to us, I always feel that these news are old news and therefore action is already over. Wondering whether you have any insider trade information to all these sources or whatever, that you can let us know. Thank you very much.
All right.
Number one, never have any insider information, because if you trade on insider information,
you go to jail.
It's actually it's a crime. You go to jail. So just trade on public information. Number two, we don't look at news as to try to anticipate tomorrow what the market will do. Actually, what I do is I analyze information, and then I try to then come up with different scenarios, what may likely happen 6 to 12 months down the road, because stock markets trades ahead of news and economy by about 6 to 12 months. So you need to try to imagine what will happen to the global economy 6 to 12 months from now. You are not trying to today Greece talks finalize, then based on this news try to make money. You're trying to say that Greece talk finalized today, but what about 6 months down the road, 1 year down the road? Is the Greece crisis over? Is it solved, or will it deteriorate? And that's a sort of scenario I actually try to come up with.
I'm trying to paraphrase Mr. Ho's question. Perhaps he's trying to talk about how you distill that kind of information, because some of the analysts that we have on our show says it's very difficult to really perhaps predict what is happening or get a handle on things, because a lot of governments these days are talking up the market.
Yeah, definitely. So, but what I always find that the longer the time frame, the more accurate will be our outlook and scenarios, because in the short term, a lot of things can happen, like ECB can go into the market, lend money to Italian banks and try to prop up the market. But in the long run, they can't afford to continue doing that, because they would run out of bullets, run out of money. So what I typically find is that I try to analyze probably 6 to 12 months time frame, and that will typically give me a more clear idea. It's like you get the direction correct, but you may take the wrong road. You can always U-turn. But if you have the wrong direction, even if you try, which road should I take? Turn left, turn right. You will not get to your destination. That's what I mean. The big picture is more important than all these minor details.